debt. Hey, this is Ken Finnan from Capital Advantage Tutoring, and I'm going to start working my way through this book as we go along. I'm going to do hopefully a couple pages per video, and then by the end you should have the whole book and you can read it with me. So what's an issuer? An issuer is somebody who issues shares, sells shares to the public, or sells a security to the public to raise money. Like a corporation could issue for short-term commercial paper, or maybe they could issue common stock or preferreds, or for longer term for bonds, where it's debt, where they owe money every 6 months. A city or state could issue muni bonds, which are GOs or revenues, and the government, the federal government, could issue treasuries, bills, notes, bonds, tips, strips, which we'll get to all in the later. Okay, so what's a broker-dealer? A broker-dealer is a firm. Remember, it's a firm that affects securities transactions. That's who you're all going to be working for, hopefully, when you pass all these exams. So a broker-dealer is a firm that affects securities transactions. It is not a bank. Everyone thinks that it's a bank. Like if you work for a JP Morgan or a Goldman, they would say, I work for a bank. You actually work for a broker-dealer. A bank is where you go in and deposit your money and pay checks. A broker-dealer is where you affect securities transactions. Okay, what's a market maker? A market maker is a part of a broker-dealer where they're buying and selling shares. They're at all points, they are buying and selling shares as a business. Sometimes with customers, sometimes you just stabilize the market. They're using their own money to buy in shares.
So as promised, here's 2 questions for you guys to answer, and then I'll answer them on the live. Here we go. Question number 1. On the trade date, the index closed up 10% and the ETF closed down 20%. What product does this represent? Is it A, a leveraged ETF? Is it B, a 2 times leverage ETF? Is it C, an inverse ETF? Or is it D, a 2 times leveraged inverse ETF? That's question number 1. Question number 2. An ADR represents what? Again, an ADR represents what? A U.S. security held by a U.S. bank in a non-U.S. branch, a foreign security held in a foreign branch of a U.S. bank, non-negotiable CD security, negotiable CD, and a predetermined security. Those are my questions. See you Tuesday.
What's an investment advisor? An investment advisor is a firm that gives advice. They get paid for the advice. They don't even have to do a transaction. It is a firm that gets paid for the advice. You pay by the hour, by the month, by the week, whatever. You can pay them as percentage of assets under management. Mostly they're about managing your money, and they get paid whether they do a transaction or not, as opposed to a broker-dealer that can only be paid if they do a transaction. Okay, different types of investors. So we have retail. Retail is individuals, mom, pop, grandma, all your friends. Anyone who is not a firm is a retail investor. That's who FINRA is trying to protect, the retail investor. Think grandma, grandpa, stuff like that. Now, what's an accredited investor? An accredited investor is an individual that has a lot of money. So there's a rule on this. So the rule is an accredited investor. Remember, 1, 2, 3 accredited. 1, 2, 3 accredited. They either have to have 1 million net worth, or they make 200 grand a year salary if they're single, or they make 300 grand a year salary or income if they're married. 1, 2, 3 accredited. 1 million or 200 grand salary or 300 grand salary. Okay. So an institution is a firm that manages money, like a bank, a broker-dealer, an investment advisor, mutual fund, hedge funds, insurance companies, pension plans. They want to invest in bigger and riskier things or products that are not normally available to retail. So what happens is FINRA goes, okay, we'll let you invest in those things that are not what other people can, what retail can, but you also don't get the same protections that the retail gets. Okay, retail, accredited, institutional. Retail is who FINRA is trying to protect, individuals. Accredited are individuals, but they have a lot of money, so they get less protections, but they're allowed to do things that retail normally can't, like hedge funds and private placements. Institutional can invest in a lot of things, but again, FINRA's not trying to protect them. Okay, let's talk about the market structure. The market structure is there's primary market and secondary market, okay? So the primary market is when the company is issuing a security to get the money. So the primary market, if you hear the word new issues, syndicates, stuff like that, those mean primary market. The primary market is where the issuer company gets the money. Then we have the secondary market. That's where it's trading. After it's issued, it's traded out there. So Act of 33 covers the primary market. Act of 34 covers the secondary. Secondary market is where everything's traded.